Hey, what's up, everyone? Trader Tim from E-mini Mind bringing you another Monday market analysis. Today is March 7th, 2016. Next week, I'm going to be doing a live trading session along with Infinity Futures. So I'll be showing my dome, the charts, how I kind of go about placing trades and think about the day. That will be the day before rollover, I believe. But we'll see what we get for trades, and we'll talk about the markets and kind of take you through my thought process. So that's next Thursday, the 17th, and you can find the link for that in the members VIP area over at eminimind.com. What I've got in front of you here is the ES, and there's a couple things I want to talk about. We'll start with the ES, and this is what I had drawn up last week. We were talking about this little decline, which hadn't really occurred yet. Monday was here, and Tuesday was kind of the breakout day. We talked about how you can enter at these big daily levels, and that video, I'll leave that video up in the members area as well, over in the VIP section, so you can check that out. So what I'm looking for when I do my broader analysis on the weekends are bigger levels that I can then zoom in and place a trade at. But I don't want to just randomly place a trade in the middle here of a range. It's nice to be able to short at highs or get long at lows when it is a support level or a resistance level. So last week we were talking about how there was a potential of rolling over. We talked about how breaking the low of this high bar in the pullback would be a great opportunity for the markets to have some momentum and push lower. And we got that for all of one day. We had a nice break of the low of the high bar, had a downtrend on the day, and then the bulls took over and pushed us to new highs from this little double bottom trend here. And I really like this pattern on the smaller time frames, and we're starting to see it on the big daily chart here, where we get a big move lower, a double bottom, a rally, and if I pull out all the way to the high to the low, you can see that we broke the 61.8 by ever so slightly. Oh, about a point or so. Whoops. Get rid of that one. And I'll draw that up again. So for all intents and purposes, the short has failed and the long has held. Now, when I first opened up my chart on Sunday, this spinning top pattern was standing out to me as, the potential for breaking down the same scenario back here, breaking the low of this high bar in the rally. And I'm just going to briefly go over to the profit chart so we can look at the volume. I've got the SPY. You can see how really the last 5 days have been up. We've got the spinning top volume, not really anything significant, but I would expect some sort of a rollover here. We've got the spinning top at the previous support level, which is now resistance. We're at that 2,000 level on the S&P, if I pull that up. So we've got a lot of factors here. I'll just throw a line up here. We'll just call it and we'll go right about here. So a general area of this 2000 to 2010, which been talking about for quite some time as we were down at lows, saying that if we were to rally, this 2000 to 2010 level would probably be a spot that we could look for some sort of selling pressure or rolling over. Now, interestingly enough, if we go to the Dow, we broke yesterday's or Friday's high, but again, pretty low volume. And the more interesting charts are the Nasdaq and the Russell. Nasdaq kind of had a bull flag, if you will, and then the Russell, of all things, new highs every single day. So kind of just as a side note, when I talk about trailing your stop underneath each bar, let's say you were long from the breakout, which I mean, even if you just bought over the previous high over here, trailing the low of each daily candle, that's where I developed the methodology that I use on the day trading time frame of trailing each candle's low if you're long. So today, my stop would have been under Friday's low. And now that we closed today, I would take my stop from underneath Friday's low, move it underneath today's low, and just, a couple cents is all you need when you're trading a daily chart. And so if tomorrow we roll over and we break this low, this being the highest bar in the rally, so if we break the low of the high bar, that is a indication that the momentum is shifting and the trend is potentially over for the time being. So I took that kind of framework or methodology of trading my stop and developed it for the smaller time frames, which I talk about quite a bit. So that's what we have going on. Spinning top along with right at the support resistance level here now is resistance. So tomorrow and this week, I'll be looking for a break of the low of this high bar and for us to roll over. And since we broke the negative 61.8 of the full halfway back short, it's just a matter of drawing up lows to highs. And what do we got? We have some support down here at 1905s, also a whole number. So I would look for us to roll over from 2000s down to 1900s and then get another bounce that takes us higher. We do have a nice little 50% that was down here at 1923s, and on the I can't go to a 512 tick chart, but I'll go to a 5-minute chart and pull back just so we can see down here. So we pulled down. This was the 50% down here, right at about 23s, 24s, and then the next morning we gapped up. But look at this. From the opening, trading hours only, low to high, we had a nice pullback right to the 44s, and that sent us sailing for a couple of days. So you can see how getting in the trend on the smaller time frames, but keeping in context what's going on in the larger time frames to manage the trade, it can just be a great way to enter at a low risk entry point, but then capitalize over the longer term. Whether you're trading futures, and I typically do not like to hold futures positions overnight just because there's so many variables. Whereas if you wanted to trade the SPY, you could take the exact same setup on the SPY, take the smaller setup, identify the daily setup, come down here, you'll see that we gapped up in the morning, we pulled back, take the first trading hours only halfway back on the 5-minute chart. Well, since you're trading the SPY, now you can then trail your stop, just like I was talking about on the dailies. So, you can enter on a 512 or a 15-minute and then manage the trade on a daily level if we're at a larger level to begin with. So kind of all about keeping things in context of the larger time frames down to the smaller time frames. Or you can just trade the 512 tick and not even worry about the larger time frames. But a few different options there for you. So looking for us to roll over tomorrow or this week at some point and take us back down to 1900 level. I mean, if we were to, as I always like to do, look at the other side of the trade or the opposite scenario, if we were to just break through all of this resistance now and this congestion and kind of move up to, let's say, 2075s, this swing high, that would be a super strong case for the bulls. And if that were in the cards, I would expect this volume to be much higher on this run up. So because we have a little bit lower volume, because we've run up for 5 days in a row, because we're at resistance, those are all reasons to be looking for a rollover and for a potential short here. But if you couple that with saying, I'm only looking to short, I'm waiting for that confirmation rather than just letting the market open up tomorrow and start shorting off the open. You know, we could rally, we could chop around, waiting for that break of the low of yesterday's candle. The break of the low of the high bar will give that kind of initiation, that new momentum shift. And so that's what I'll be looking for tomorrow or later in the week. Typically, we don't get too many inside bar days where the high and the low of today is within the high and the low of yesterday. So it'd be pretty rare to see, you know, 2, 3, 4 of those in a row. But I'm using yesterday's candle because today was an inside bar as my signal bar. So looking for a break of the low that would allow us to start taking shorts down into the 1905 long. So if you have other questions, feel free to shoot me an email, tim@emoneymind.com. Always happy to help. And like I said, next week we'll be doing a live trading session on the 17th right at the open. And you can find all that information in the VIP area at emoneymind.com.